So another very effective way to make money in the markets is to only trade in line with the momentum on a higher time frame. So what do I mean by that? So on the one side, on the right, you will see that there is what the 30-minute time frame, and on the left you'll see that there is the daily time frame. And if I go to properties, okay, and I go like that and I put the period separators in, and I do the same for the 30-minute chart, the 30-minute charts separators have a period of time, are each showing a period of time of 1 day. So these are the 30-minute, all these 30-minute candles here, this designates 24 hours, okay? And on the daily chart, this designates a whole month, okay? So this is April, this is May, okay? And this is the 16th of May. So this 30-minute chart here is represented by what happened yesterday. So what we can see is, if I go here and I start drawing some lines here on the daily chart, I can see that price is actually moving sideways on the daily chart, and that there isn't really momentum because price is crossing over, okay? And in fact it's forming something that is called, what we call support and resistance. So horizontal support and resistance, if I draw that in here, this is what we call when price moves up and it hits a certain level and it bangs up against it, and then and it kind of moves away and doesn't go through it, we call that resistance. And this is, if I put that there, you can see how these candles, this candle banged against it and closed below it on the daily chart. This candle here opened there, and then the next daily candle tried to go through it and it couldn't, and basically it didn't actually go through it till days later. So because we see all these candles moving sideways, not able to go through this level, we know that this is what we call a resistance level. And then what often happens is you'll find that the candles will move back, they will hit that resistance level and they will sit on top of it. So if you think of the resistance level as like a ceiling and you're banging your head on a ceiling, and it then forms the seat of a chair, and price comes and sits on the chair, or rather maybe a floor, comes and stands on the floor. And so this resistance now becomes the floor, the support that price can sit on, okay? And this is also important information when you are deciding about where the momentum is likely to go and how much momentum there is in the market. So we can see that these daily candles for basically the whole of May have just been moving sideways. And so that is going to make us, so when we do our trading on the lower time frames here, if we see what's happening here and we start putting in our, see there is another level there you can see of resistance, okay, that is if we actually put those levels in to our 30-minute time frame, okay, which is probably about there, 1.29462, 1.29462, okay, that provides us with a good place to know where we're going to take our 7.1. It's nearly there, so we'll just put it down to 6.2, somewhere like that. Okay, so that provides us with a good place to take profits from. Okay, so what we're doing is we're overlaying these higher time frame levels, higher time frame support and resistance levels and trend lines. Let me color these green. I always color green for my daily trend lines and support and resistance. So we color those green, and then what we can do is we can overlay them if I now go down to the 30-minute chart here, this daily chart, okay, all right, so I can now see the daily support and resistance on this chart, and I can now overlay the 30-minute trend lines. Okay, so I can now see this 30-minute chart, this 30-minute pattern in the context of a daily pattern. Okay, in context of the daily support and resistance, and that gives me more information to know where the energy of the market is likely to be. Okay, so but what this also tells me, if I go back to the daily chart, is that there's not a lot of momentum in the market, because the momentum, if you remember in an earlier video, I talked about how I use this moving average. Here's the momentum on the pound US dollar, and because this fast moving average is moving very, very fast, and the candles are exceeding the moving average. So really that's where I want to look for trades. But here the price is moving sideways. So the only sort of trades I would want to take here are these sort of sideways small moves. I'm not going to take big moves in the market. Now that's not to say that you couldn't take trades during this time, because you certainly can, okay, but you would only be taking very short-term trades, 20 or 30-point moves. Let's see how much there is there. Oh, well, this is a 70-point move, but you would only be taking small moves, because you know that looking here, that price is moving sideways between these two levels of resistance, and in fact there is another level here. Okay, you can see here that price on the daily chart has been moving between these areas. So this only actually gives you an area of about 58 points on the daily chart. So you will only, so that gives you a lot less than, for example, a lot less momentum and a lot less leeway than these sort of candles here, which are moving up strongly. Okay, so what you would want to do is actually go and look for what's happening here, for example. So let's go here. So you can see here now that price is moving with a lot of momentum, that the candles are big. There is still a pattern in the market. If I draw this pattern, okay, we're now on the euro US dollar. We now have a widening pattern. Okay, and the reason why patterns work, to be honest, I don't know why they work, and I don't think anybody could tell you really why they work. The only thing I would tell you is that there's an expectation. I think they probably work because they are easy to see and they are predictable, and traders look for predictability in the market, and the big traders, this is what they look at. They look at things like patterns and trend line breaks and breaks of support and resistance. So these very simple patterns tend to work very well. I told you I was going to make things very simple for you, and you don't really need to understand why they work, because I don't think anybody really does understand why they work. The key thing is to actually know that simple patterns, simple breaks, things like breaks of big round numbers, things like that, those are the things that work in the market. You don't need anything complicated. You don't need any complicated indicators or anything like that. Simple patterns and lines are enough in the market, okay? But what you do need to know are where is the energy in the market? Where's the momentum? Okay, and so these simple patterns, by using these multiple time frames, that's where you can find your opportunities in the market. So here, for example, we didn't know that these 2 days here, we didn't know, if we go back, all right, we didn't know after this candle what price was going to do next, all right? But the thing is, we could see by doing these two lines here that that a megaphone channel had formed. So seeing as we know that a megaphone channel has formed, we expect that the next thing, is that price is going to bounce off this trend line here and is going to go in a certain direction, which is up. It's predictable, all right? And, when you can see that there's these multiple candles here. It didn't actually form a third bounce, really, but there was a lot of candles here which formed this first bounce. It wasn't just a one candle bounce like this. So there was a lot of evidence that this diagonal line had a lot of strength to it, okay? And likewise, price bounced off this diagonal line here very, very smartly. So this is how you form these patterns. So this, we know before it happens that this is an area with an opportunity to go long. And then what we do, when I say go long, I mean go up in the market. And so then what we do is we go over to the lower time frame, and we're now looking for ways to enter into that move. Okay, so if I just put those lines in, so actually there's in fact I won't go there, I'll just do this one here. Okay, if I go back down to the 30-minute chart, okay, so what we've seen now is, so on the 30-minute chart, all right, we would be looking for opportunities to get into this move. And when you look at the 30-minute chart, you can see some really good opportunities because we see what are called these sideways areas of support and resistance. Okay, so I'm going to go back to this orange line here. And what happens here is that price has moved sideways and it's formed this sort of coiled up energy. And so you can see here that price starts to move here. Okay, it hits this area here, forms this sideways move, and then it starts to, after the weekend, these two lines here stand for the weekend, starts to again form this area, confirm this sort of area here of resistance, this sideways move, and then it breaks through with a big candle at about well, we'll say 6 a.m. in the morning, but I think this is actually 1 hour ahead. It's about 5 o'clock in the morning, 5 to 6 a.m. in the morning. Price bursts through this level here, and this is when we're expecting this. We're expecting this to happen. We've already seen the setup on the daily chart, and this is where we start to look for opportunities, low risk opportunities to get into this move. Now, if I just overlay this with a moving average, with the two moving averages to measure momentum. Okay, let's just do that. Right, well, let me come back to this in a second in the next video.